And the key thing to remember about Bitcoin is when this whole situation started with COVID, it went down with the NASDAQ, went up with all the liquidity. It's gone back down. Now it's gone back up with the stock market. So for it to show divergent strength away from the stock market, I think it has to probably get through this recession, which we all know is coming. If you certainly look at the yield curve, it's a matter of time. And to see if it can show divergent strength with the stock market going down. As the Fed has pointed out, they are not going to be there to cut rates, which probably is bearish for equity markets. Or does Bitcoin outperform on the way up? I look at it as it's got to prove itself. And at 30,000, about 3,100 this weekend, at 31,000 this weekend, I think it's just a little bit too risky here, particularly if we tilt over to that recession. It brings most assets, risk assets, lower.
Bitcoin prices remain above the $30,000 mark amidst challenges linked to the looming economic recession. Mike Mcglone, a senior macro strategist at Bloomberg Intelligence, sheds light on the future prospects of Bitcoin and discusses the impact of geopolitical tensions we've seen in recent days. Bullish Bitcoin investors are preparing for the seasonal surge, as the world's largest cryptocurrency tends to rally during the month of July. Over the last decade, Bitcoin has gained an average of more than 11% in the month of July, with 7 out of 10 months showing positive returns. The last 3 consecutive years have seen returns of around 27%, 20%, and 24% respectively in July. While summer tends to be a period of consolidation for Bitcoin, a strong July tends to be followed by a mediocre August and a sell-off in September. Mcglone expects Bitcoin to rally towards $35,000 before selling off and retracing to $30,000. He predicts another move higher to $40,000 directly after. In this video, Mcglone dives into his Bitcoin prediction for 2023 and how commodities are taking a hit in the last half of the year. Let's get right into the interview with Mike Mcglone as he discusses what we can expect in the crypto and stock market, beginning in just a few days' time. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel.
Well, I'm much more worried that of the whole tide going out because of this recession and the risk that everybody's priced in for the bullish scenario. The Fed's going to ease, the Fed's going to save us, yet Jerome Powell said he's not going to. You look at the interest rate expectations, they're still priced for higher rates. And we're getting liquidity pools, meaning higher rates in England and Canada and most of the rest of the world. That's just not a good environment for an expanding global economy that's maybe tilting over to recession. People are hoping for, even if we go for recession, the Fed will ease and save these risk assets. The key point is Bitcoin is still very much trading like a risk asset, like the stock market. Now you look at things like gold and treasury bonds, they might be better off. So it's got to prove it. And the best way to prove it is to get through this recession and prove it. Otherwise, it's just a faster version of the stock market, which I think most people are looking for, this faster horse in the race to transition to trade more like maybe gold and long bonds. And basically, you have to be bullish the stock market here and expect Bitcoin to outperform. Otherwise, to me, the key risk is the tide goes out and Bitcoin's the fastest horse in the race and it kind of leads the way. This is a revolutionary technology, and oftentimes that's what humans do when something comes in that they don't understand, which is okay. The key thing about the crackdown, I think, is prudent, is we have to purge some of the massive speculation in this space. All revolutionary technologies have massive speculation. I was reading this weekend about RCA, the radio company, went from 3 to 300 and then back down. These things happen, but there's 25,000 cryptos in each purge, and then there's Bitcoin and Ethereum and crypto dollars. That's very significant revolution technology. The key thing is Bitcoin's going so far, so fast, and it still just it's got to prove it's not just going to go up more than the stock market. And that's the key thing that most of our viewers and listeners have not lived through, a true stock bear market where it drops 20%, the Fed doesn't save you, and then it drops another 20%. To me, that's the risk in the broad market. Crude oil commodities are a bear market. They're down. They were down almost 30% for a little while from the peak, down 20% now on a year-over-year basis. And the key question you have to ask yourself is what's going to stop this and save it? Typically, it takes a long and variable lag. Federal Reserve easing. What are they doing? They're still tightening. Now, you see what's happening in China. China's leader made a major mistake of his unlimited friendship with Mr. Putin. And what's that doing? Overall, to me, it's tilting the whole world towards recession. China's having a problem with all the data is disappointing. That's the body in motion. You have to ask yourself what stops it. So I see crude oil is more likely to head towards 50, maybe even 40, priced on what It's already happened. Natural gas has already done that. Natural gas went from 10 to 2, and now it's bouncing. And I see the whole commodity market in a bear market, and the question is, I don't see anything stopping it. So I think the best commodity might be continue to perform well in the next year or so is probably gold as we tilt towards recession, and maybe we eventually get a Federal Reserve pivot or ease. But for a commodity bottom in the commodity market, typically we are way too early. Typically, you need to see a lag to easing, and we haven't even started that yet. And the Federal Reserve and most central banks still tightening leads to the recession being over. Right now, we're seeing a bounce. But I did make the call for $50 a barrel a long time ago when it was much higher and it was on the way up. But that is the trajectory. The key thing is that's what it always does is commodities always go towards near their cost of production in the long term, in particular when economics get a little dicey. And that's happening right now. $50 is the average cost of production in the US. In natural gas, the average cost of production is around 2. That's where the market's bottom. So right now, the key question I like to ask you and our viewers and everybody else is what stops this bear market in crude oil? OPEC's trying to help by cutting supply, but typically what happens when OPEC cuts supply, that happens in bear markets. They're responding to what they see in the macro in a prudent way for a cartel that's trying to boost prices.
Despite Bitcoin hovering around the $30,000 mark after getting a boost from the potential launch of BlackRock's Bitcoin ETF, Mcglone warns that this won't shield the asset from its first US recession. US investors have been piling into Bitcoin as institutional activity accelerates, driving the recent rally of the largest cryptocurrency by market cap. BTC's price gains and trading volume have concentrated during US market hours recently and have been the main force behind Bitcoin's strength. Bitcoin has surged 85% so far this year, per CoinDesk, outperforming most of the crypto market. The price action has come as a slew of financial heavyweights, including BlackRock, Fidelity, and Citadel, have become more involved with BTC, spurring investor optimism. Smaller cryptocurrencies have struggled amid increasing regulatory scrutiny, whether they are unregistered securities. Trading platforms have subsequently curbed offering popular tokens to avoid risk. Bitcoin's latest surge has also coincided with decoupling from the performance of US equities, such as the S&P 500 and Nasdaq indices. Its 30-day correlation turning negative last week for the first time since January of 2021. BlackRock's initiative has also rejuvenated institutional activity on the Bitcoin market. Digital asset funds recorded $199 million of inflows last week, the largest in almost a year, with Bitcoin-focused funds enjoying 94% of all inflows. This recent activity showcases an inflection point in crypto's institutional adoption. The next few weeks will be an indicator of the direction Bitcoin, and cryptocurrency more broadly, is headed in Q4. What do you think about Mike Mcglone's recent crypto prediction? And how do you see regulation and BlackRock's ETF approval affecting the crypto market in 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. We'll see you in the next video.